Awesome, awesome, awesome. Very good. Want to thank everybody for joining me. It's a little bit after 10. We're going to get started. I'm going to share my screen, and you guys can let me know in the chat or in the Q&A if you can share my screen or raise your hand or do one of those fun things. Hopefully, can I see the hand raising? Oh no, Joe. If somebody could let me know if you could hear me or see my screen. Sorry, see my screen. Let me know down there in the chat. Whoop. Yes, thank you, Christy, Angela. Awesome, awesome, awesome. Okay, so today we're going to talk about VA loans, working with veterans, and what you as a real estate agent need to know. So I love this topic. I think it's really awesome that you're taking some time to learn about this. If there's any men or women, service members, family, friends, anybody who's been in the service, I salute you. I wanted to thank you specifically for your service. If you're the spouse or a family member of somebody in the service, I thank you as well for your commitment and your service, because it definitely takes a lot to serve our country. Can you see my little cross? I got an awesome little cross back there. It's my patriotic little two things I love. I love our country and I love Jesus. So there you go. A little bit about Joe Soto. So I'm Joe Soto, husband, father, all around good guy who does loans, been in the mortgage business since 2004. I've been teaching classes here at PWR for 4 years now that we've been doing classes. And for me, it's something that's super awesome. Before I got into the mortgage business, I worked for a little company called Disney, and I thought I was going to work for the mouse forever until I had a friend of mine say, you know, you're really friendly. You should really be in sales. Like, you shouldn't work for the mouse. And I said, I don't know anything about loans. Like, what are you going to teach me? And so I got into the mortgage business way back then, and really just learned a lot. And so that time at Disney that I was there for 4 years really taught me about teaching and coaching and giving back. And so the last 6 years, I've been professionally coached by a company called The Core Coaching. It has literally transformed my business. I think my income is up, I don't know, 10x or something like that, some crazy number. And I've really gotten structured. And so I love doing these classes here at PWR. So you're going to get a survey that you're going to hopefully be able to fill out for us. I did put my Linktree link into the chat. I can type it in here again so that you guys can see. If you can access my Linktree, in there is a survey in there. That way we can get that back to PWR, and we can do that at the end of the class. There's also some links to follow me online. If you want to get invited to other classes that we're doing, we do classes on trusts. We have a class coming up on appraisals. We have a class coming up. We just did one on credit. We've got another one coming up on how to work your database, how to build your database, how to do client events. Like, we do all types of stuff for agents to just help you pick out little nuggets that will help you with your business. And so you could scan the QR code. You could follow me online. Does it say it here? I'm at your favorite loan guy. So at your favorite loan guy on Instagram. I should put my own little picture in there. But here's all of my phone numbers and contacts and all of that stuff. So we're going to get into VA loans and talk about what is a VA loan. VA loan is provided by the Department of Veterans Affairs. It was established 1944, and it's for your primary residence that you can refinance that mortgage and you can take out the loan. So that's a real key, because it has to be your primary residence when you purchase it. If you're using it to buy units, you must live in one unit and you could rent out the other 1, 2, or 3, right? But it has to be a primary residence. Ideally, the VA loan was set up for servicemen and women to have a place to live when they get relocated or when they get orders to go to a different location, so that not everybody's living on base, right? If anybody's ever lived on base, I hear that's very difficult to do, even though I've never done it. Everybody always wants to get off base. So that's the main reason why the VA loan was created. Here is about eligibility. So who's eligible? Active duty, servicemen and women, National Guard or reserve members, and then qualifying spouses of veterans. So there's 3 different categories as far as who is eligible. And just to kind of backtrack, if I do mention something in here and you have a question, just type it in the Q&A, right? I got the Q&A open on my other screen. Feel free to ask. I wish I could unmute you guys, but it's not set up that way. So if you have a question, just ask, right? Like, hey, I heard, can you use VA to buy a commercial building, right? Like, or can you, how about if you're the brother of a veteran? Can you use their VA loan, right? Like stuff like that comes up. And if you have those questions, you're not going to throw me off by just throwing it in the chat. There's a chance that if Carol has a question, Christy has the same one, or so does Cynthia, or so does Giovanni, or anybody else. So that's who's eligible for a VA loan: active duty, National Guard or reserves, and then qualified surviving spouse can get the VA loan. Now, the one thing about the VA loan is the VA is basically the guarantor of the loan. They're not the bank. So thankfully, there's no bank of VA because lots of government agencies are really slow at doing things. They're not guaranteed. They're not doing the loan. They guarantee the loan. So the benefit of the VA loan is obviously you could buy with zero down, right? Now that it covers the down payment, typically does not cover closing costs, right? There's still closing costs, and we're going to go into a bunch of closing cost questions later on. Now here it says the purchase price can't exceed the appraised value. So meaning you can't get a loan for more than the appraised value. That being said, if you're in escrow at 800 and it appraises at 790, does that kill the deal? No, the deal is not killed, right? VA will still allow you to get the loan. The difference is that $10,000 the veteran has to come in with when they purchase the house, like any other type of loan, right? Conventional, FHA, anything like that. But the loan itself cannot exceed the appraised value, okay? And then subject to qualification, really I haven't in the last, knocking on wood, in the last, I don't know, 5 or 6 years, I haven't had many issues as far as property qualifications. The thing that's a little bit different when qualifying for a VA loan is that we qualify you on your what's called a residual income. And residual income is basically your income, less taxes, less withholdings, less expenses, what's left over. So we'll talk a little bit about residual income there. Jose had a question. Can a veteran bring a non-veteran co-signer into the loan who will live in the house with them? That's a great question, Jose. I feel like I teed that up for you, Jose, because I mentioned it. So the answer is yes, right? So I could have Jose the veteran buying with Joe, or no pun intended, let me use somebody else's name, Deborah, the non-veteran. The key with the veteran and the non-veteran is that when you do it like that, VA is not going to guarantee 100% of the house. So they're going to guarantee basically 88% of that loan. So in order for a veteran and a non-veteran to buy, that they would have to come in with 12.5% in order to still do a VA loan, right? At that point, you may want to look at doing an FHA loan, but it can be done. Same thing if people aren't married, right? So if it was Jose and Cynthia, or Jose and Deborah, let's say, and they're not married, right? Like you guys are just engaged. If you're both buying together, you'd basically have to put 12.5% down in order to buy that house. Now, Jose and Deborah get married, they can do 100% financing at that point. So it's possible, very possible. Usually the 12.5% down is the magic number. How to answer your question, Mr. Jose? Hopefully, yes. I'm imagining you saying yes. The other thing is there's no private mortgage insurance, right? So no PMI when you get a VA loan, because the VA is guaranteeing the loan, right? They're insuring the loan. If Jose forecloses, VA pays Bank of Joe all the money that's owed. There is a VA funding fee that's paid at closing, which we'll talk a little bit about that. And the VA funding fee can be waived if the veteran is exempt with service-related disabilities. And so that funding fee is a fee that's collected up front. so that it can go into the VA fund to pay future foreclosures. So almost everybody pays a VA funding fee. I'd say about 90% of people pay the funding fee, and that's added to the loan amount. Let's see. Oh, I thought I had a question. So here's the chart on the funding fee. And how is it charged? So let's just say, can you guys see my calculator? I'm hoping you can. Yes, okay, thank you, Carol. So funding fee is added to your loan, right? So if your down payment is less than 5%, you have a funding fee of 2.3% if this is your first time using your VA loan. If you've used the VA loan 2, 3, 4 times, you pay a higher funding fee because that's considered a subsequent use, multiple uses. So let's just say clients purchasing a home for $700,000. They're putting 0 down. They've never used the VA loan before. The funding fee is 2.3%. So if I do 700,000 times 2.3%, another $16,000 is added to the loan. So Joe Veteran would actually be doing a loan for $716,100, right? They don't pay it out of pocket, but it's added to the loan unless they're exempt. And you can see there's a chart. If you just Google funding fee chart, it'll come right up and show you what it is so you can share with your client. Resi had a question if you can deduct the funding fee if you can pay it up front. Yes, you can pay the funding fee up front. And so you can not finance it if you didn't want to, or if you don't want to take on that additional loan. A lot of times the payment difference isn't all that great. And a lot of times people just rather keep the money in their bank account, right? If using this same 700,000 example, most people would rather keep the 16 grand in their pocket and use that for repairs on the house if the difference in the payment is $40 a month, $50 a month, right? Something like that. So, but you can do it. Very, very good question. Good question, Fessy. Any other questions on funding fee? Because I know that's one that comes up a lot. Something comes in, just throw it in the chat. So some of the advantages, and we're going to talk about closing costs. I know agents always have questions about the closing costs on the VA loan. So VA sets a 1% limit on lender origination charge, right? So the lender can only charge up to 1% of origination fees when they get a VA loan. And that can be charged to the veteran upfront. I will tell you that a lot of my veterans who are coming in with 0 down do not want to pay a 1% origination fee, right? $700,000 loan, that's $7,000. That's a lot of money. So you have the option to not pay it, but the fees cannot exceed more than 1%. You can get a seller contribution. Remember when sellers would pay closing costs? Oh, it seems like just yesterday. I did an awesome video online about it. It's really great. You should check it out if you're following me on social. And so you can get up to 4% for funding fee prepaid. And you could actually, when I showed you this 2.3%, right, you could actually get the seller to pay that back in the day. Nowadays, I think a seller would look at you like you were crazy if you said, I want to make an offer on your house and I want you to pay 4% of my closing costs. That would probably not get you a counter. And there's no limit for reasonable closing costs, reasonable discount points. So you can buy down the rate, right? That's not a problem. It's origination fees, lender charges that are limited. Who is exempt on those fees? So Jose, are you asking about the funding fee exemption? Is that right? I see your message there. Yes. So on the funding fee, the only way you know if you're exempt from it is if the lender pulls what's called a certificate of eligibility and it comes up as exempt. The other way that you may know if you're exempt is if your client or yourself, if you get a service-related disability. So if you're getting income from the VA monthly for disability and say, hey, I'm getting $500 a month, $300, $800, $1,500. If you're getting disability from the VA monthly, a lot of times you are exempt from the funding fee. But the number one way to know is if the lender pulls the certificate of eligibility. That's great. Christy with a great question. Does the appraisal, very good question, Miss Christy. Does the appraisal have to appraise for the purchase price plus the funding fee? Great question. That answer is no. So on this same example, if you're in contract at 7 and the funding fee takes you to 17, as long as the home appraises for 700, you're good. If it appraises for 690, then the veteran has to come in with that $10,000 difference, right, in cash. Really good question. I've never been asked that one. Very, very good. I like it. Because appraisals are a thing nowadays, right? We're all about to make sure a home appraises. So it used to be the loan approval was a thing. Now you're just crossing your fingers and praying to baby Jesus about the appraisal. The other thing about the VA loan is it's not just for one-time use, right? You can use it multiple times. Guidelines are a little bit more flexible. Property purchased with a previous VA must be sold, loan paid in full. So VA will let you have 2 homes. So if you buy home 1 using your VA loan, and then you buy home 2 using your VA loan, it's very difficult to have 2 VA loans at the same time, but it's impossible to get 3. You'll have to sell that first one if you wanted to try to get a third one. So it's very, very difficult to have multiples. What I have seen some of my veterans do is buy that first home with the VA, value goes up, they've refinanced it, pull money out of the house, or just get it into a conventional loan. And now they've freed up that VA loan to buy the next house without any down payment. That I've seen done a number of times, but you can have more than one. So a lot of people think you could only have one. It's tricky, but you can have more than one VA loan at the same time. Most people do the refi thing, put it into a conventional, and then use it again. Rates are definitely more competitive. Typically, the VA rates are a little bit lower than conventional rates, but got to remember that there's higher fees. So I have a client now who's putting like $100,000 down on a $400,000 house, and he wanted to compare the VA to the conventional. Well, it's his second use. He was going to be paying 3.6 points to get a quarter better interest rate on a VA loan. It wasn't worth it for him to do that. Right? So, oops, sorry, I went the wrong way. So you definitely want to compare. If you're putting 0 down, usually the VA loan is the best way to go. If you're putting a larger down, sometimes the conventional loan is still a little bit better. There's no loan limits. So I know for those of us who've been in the business some time, we knew, and you still run into this in Temecula. I know we had somebody from Temecula earlier, where the Riverside County loan limits are different, right? Or San Bernardino County loan limits are different. And that gets you on an FHA loan. I can't tell you how many agents call me up month after month saying, I got this client, they were approved in LA and they found a place in Chino Hills and the loan limits are different. So now with VA, there are no loan limits. You can literally finance $1 million, $2 million in Temecula, for example, and VA will still let you borrow 100% financing. So definitely no loan limits. Makes it great when you're going, if you're looking in Orange and LA County and you wind up going to San Diego or Riverside or San Bernardino, because now you don't run into the issues that FHA buyers run into, right, when the loan limits change. Really, really good. This was like a huge change when we saw this happen as far as the loan limits changing. So super duper awesome. If you have any veteran clients who may have been looking in different counties or maybe that stopped them from buying before, just know no loan limits anymore. Really, really super huge. So again, just to kind of recap, 100% financing, limited closing costs, no PMI, no loan limits, competitive interest rates. I think, and I hope I'm right, but I think PWR sent out this PowerPoint. If they did not, you can put your email in the chat and I will send it to you. Or if you complete the survey, you can put your email in the survey and I will send it to you. And the reason I tell you that is because a lot of these little tabs are great social media posts. Really good things if you wanted to say, hey, I really want to try helping more veterans. Here's some perks about VA loans. Literally, there's probably 10 to 15 slides that you can use in here and just post them. So you could always do that for me, and I will make sure I send it over to you, and you can share it. We're always looking for content. So there you go. I forgot to mention that a little bit earlier. The other real benefit on a VA loan is what's called a VA Streamline Refinance, or an interest rate reduction refinance loan. So it's a VA IRRL is what we call it, VA IRRL. And so once you have a VA loan, let's say you got in today's awesome rates at 5%, which we don't want to talk about. Joe Soto is not to blame for the high rates. I want low rates as much as everybody else. But if you got into a VA loan, let's say at 4.5%, and in a year rates drop to 3.5%, well, as a veteran, you can refinance, you can streamline that loan to the lower rate without going through the whole process of doing a whole refi, right? It's called a streamline. So you don't need an appraisal. You can go into a lower rate. You could even shorten the term. Fees are really, really low, but you only can do it going VA loan to VA loan. So that's another huge benefit on the VA, right? And we saw a lot of people who bought homes in 2018-19 that when rates dropped, they refinanced and dropped those rates way down. So interest rate reduction loan, again, another reason why the VA loan is the biggest no-brainer in the history of mankind, right? Some people ask me, well, why does VA do this? VA does this because it benefits VA, right? Got to remember, Veterans Affairs is guaranteeing the loan, right? They're the ones who are going to guarantee the loan. And if you can pay, let me pick somebody here. If Angela can pay at 5% and the rates drop to 4%, that will make it easier for Angela to pay, which ultimately limits the risk that VA is taking, right? If they make it easier for you to pay, less chance that you will default, right? And that's the business that they are in, is making sure that they don't default. So they do it. It's a nice thing to do, but they only do it really because it benefits them. Let me check my copy. Yes, I see some questions. Thomas had a DTI question. So VA doesn't use DTI to qualify. Thomas, you could have a 60% debt ratio. You have to meet the residual income requirements. I think I have a slide in here about residual income, but I don't know. Let me see. Let me see if I have it. If I have the chart. Okay, I'll see if I pull it up. Okay, Beatrice asked, so how does VA determine the limit of the loan, type of veteran, or how? When you said no loan limits, but I already had experience with two different VA credit limits. So how do they consider the credit limit? Really good question, Beatrice. So it's a little bit of a loaded question. Her question is, how does the lender determine the limit? Technically, if Beatrice was buying a house and it was $1.5 million, as long as she fits the guidelines, there's no limit on how much she can borrow, right? Let's say you made $100,000 a month and you want to borrow 1.5 million. Cool, you can get that. Now, when we're figuring out how much you qualify for, at that point, it's your residual income that matters. So it really comes down to your debts and your payments. So what I mean by that, Beatrice, is let's just say your client your client wants $1 million house, but based on their income and their liabilities, they may only get approved at 720, right? Like that might be the cap. So you still have to meet the guidelines, but as far as like price of the property, there should not be a limit. Like I don't, without knowing more details on those two experiences, the limit may have been based on their qualification, not because, hey, this house is bigger than the allowed limit. The other piece to that is if the client already had a VA loan. So if they had a VA loan, then there are limits to how much you can get on a second VA loan. That may be what you ran into. Cool. And I see people raising their hands. I think you can just type in the question. Like I see Deborah and Giovanni. Oh, let's see. Copies. I will send the slides. If you do have a question, you can type it. I don't know how to unfortunately, I'm really good at loans. I'm really bad at, it's like I see Deborah Burke. Deborah, did you have a question? Because I could unmute you, I think. Or Giovanni or Resties. If you have a question, just throw it in the Q&A. Cool. I hope that helped, Beatriz. And if you do have any other questions, you could always just give me a shout. I'll type my cell phone number in there. And I just put my cell in the chat. Okay. So then there's a thing called VA non-allowable fees. And this comes into play sometimes when you're making offers and you might hear an agent say, well, can the veteran pay for that? Or can they not pay for this? Here's the thing with VA non-allowables. If the lender is charging an origination fee, if they're charging 1% origination fee, then the VA is not going to let the veteran pay for any of these fees, right? So there's some lenders, like I know USAA and Navy Fed, right? A lot of times they charge that 1% origination fee, but then they'll cover some of these other little fees that come across. Veteran can't pay it. Ultimately, the lender would have to pay it, right? So that's the nature of the beast. Sorry, I have to close this. Chat is popping up. Okay, my apologies. I will tell you that I haven't had an issue with VA non-allowables in a long time. As long as the lender is not charging crazy fees, you should not run into any issues with any of this stuff. Veteran can pay. Oh, sorry guys, that keeps popping open on my chat. The other big thing that we're seeing is VA turn times. So how long does it take to get an appraisal back, right? We're running into this a lot on these, right? So how long does it take? Because I'll tell you, most of the offers that we're writing are what? They're waiving appraisal contingencies, right? And they're waiving loan contingencies, and they're shortening their inspection contingencies. So VA has their own little portal, that you order the appraisal to. They have a 7 business day turnaround time to get the appraisal back, right? It's 7 business days to get the appraisal back. So if you ordered an appraisal on a Friday, or the offer, if you order it on a Friday, let me pull up my little calendar. I order it tomorrow. They have 7 days. 1, 2, 3, 4, 5, 6, 7. That appraisal may not come back until the 19th, which is really 12 days. So you have to be careful on appraisal contingencies when you're writing that in on a VA loan. You also have to be careful when you're doing quick closes, short closes. Like we can do VA in about 21 to 23 days, right? Like that's really, really good. And you got to figure if it's going to take this many days to do the appraisal, now you got to get the approval. So you need a little bit more time, but there's nothing. The appraiser has that 7 days. They can use all 7, they can use 1, but they have that time legally by VA. Robert, yeah, we're going to send slides. Again, if you want the slides, just make sure you drop your email address in there. Resi had a question. So VA loan does not base their eligibility to get a loan. I'm not sure if I understand your question, Resi. The VA does have guidelines, right? So in order to be eligible, you have to make sure you meet the guidelines. Meaning, let's say you make $10,000 a month, and you have $3,000 in debt, right? So that's $7,000 left over. Well, you're not going to qualify for a $7,000 mortgage, right? You may only qualify for a $3,000 mortgage. So there's still guidelines that VA adheres to. They're just a little bit different than conventional and FHA. It being asked, does the seller have to pay closing costs? Another great question, right? And we hear this a lot from listing agents. Seller does not have to pay any of the veteran's fees. Nothing that has to be paid by the seller in regards to their fees, title, escrow, lender fees, or anything like that. The one thing that you do run into, is termite reports. So this is another really big one, and I don't know if there's a slide in there for it, but there should have been. Let me see. Termite report. So the one big one that we run into on VA is that the veteran cannot pay for termite. Seller has to cover the termite report. The veteran, let me stand corrected. The veteran can pay for the report. So, hey, I'm Joe Veteran. I'm making an offer on Carolyn's home. The veteran can pay for the termite report. They cannot pay for the termite repairs. So that's something that you have to make sure. You can't, when you're submitting an offer for a veteran, you can't not include termite. The VA is going to require a clear termite. Section 1, clear termite on every VA loan. Carolyn asked, if it has to be a primary residence, then buying land to build on a house would not qualify. Great question, Carolyn. I've never done a VA loan on land. I don't think you can do it on land because I think it has to be secured against a property. I know that there are some like VA construction or renovation loans that maybe if you own the land already, you can do that type of financing. But I don't think that you can use it to buy land. But that's a really, really good question. Giovanni said, can you pay for a rush appraisal? Nope. No rush appraisals. So I've had some appraisals come back in 3 days. I've had some come back in 7 on the dot. You just don't know about that. Good question, though. I like where your head's at, Giovanni, because I would do the same thing. Let's see. Yes, thank you guys for putting your emails in there. I'll make sure I get that out to you. Jose had a great question. Does the vet have to be on the same job for 2 years in order to qualify? That answer is no. They don't have to be on the same job for 2 years. Typically, if they're employed for 2 years, that's great. But if it's been normal job changes, right? They went to a new company or got a promotion or whatever, that's okay as long as you connect the dots. Sometimes what the VA doesn't want to see is that you've had multiple jobs. I've had 6 jobs in the last 2 years. They might want an explanation about that, but there's no requirement that you have to be at the same job for 2 years. Okay, James wants to confirm. So James, that is a great question. I want to confirm that we can have 2 separate VA loans on 2 separate properties at the same time. And he says, I thought VA loan was only for primary residence. So the answer to that, to be really clear, James, is yes. You can have a home you could have 2 homes with the VA loan at the same time. VA has a special formula that they use to figure out if you're eligible to have 2. but you can. And here's where it comes into play a lot of times is if I'm in the military and I'm stationed here in San Diego, and then I have a house, but then I get orders to go to Texas, and I go and buy a house in Texas. Well, now I have 2 VA loans, right? And this one I did rent out. Typically, they want you to own the home for a year before you rent it out, but you can have 2 at the same time. A lot of times what people will do is Joe goes and buys that first property with his VA loan, refinances it to the conventional, and now he frees up the VA entirely. But it is possible to have 2 VA loans at the same time, although it's highly unlikely in California. A lot of times when I see it work is when a client gets relocated from, I just had one. Where are they coming from? Oh my goodness, Joe. Louisiana. Ooh, they're coming from Louisiana, which is a really low price point, to LA, which is a really high price point. A lot of times it works that way. It rarely works leaving LA, right? It rarely works having an $800,000 house, in Anaheim Hills, and then going to buy another house in Georgia, right? Very rarely works. Good. You guys are using the chat. I am super grateful for you guys. That is awesome. Sometimes I do these classes and I feel like I'm the only one here. So this makes me happy. Good. And we do have 60 people on here. I love you guys. Super awesome. I thought there was another appraisal question. Sorry. Making sure I didn't miss it. I apologize. Oh, Norma had a question about the termite. Seller can pay for the repairs, VA cannot. So on termite, you can't not include it in the contract. Even if you put in the contract, buyer waives termite, the lender 100% of the time is going to ask for a Section 1 clearance. So you're going to need a report and the clearance. The veteran can pay, the buyer, right, can pay for the termite report, right? Like they could pay the $90 to get Joe Soto termites out there. But the Section 1 repairs, the veteran cannot pay for. So a lot of times that has to be negotiated with the seller to cover, or somehow the agents work it out depending on how much it is. But the veteran cannot pay for the termite repairs. I hope that answered it. Good, thank you, James. Yes, Robert, I hope I answered your question on the termite. Veteran can the veteran pay for other repairs? Good question, Robert. So that answer is yes. I mean, I guess, right? So if let's say the water heater is not strapped, or let's say there's a door that needs to be fixed, the veteran could, if the appraiser called it out, the veteran could fix that prior to closing. I've never had any issues where that doesn't come up, where that has come up. But yes, other stuff the veteran can pay for. Good question. So Jay is asking about Section 1 and Section 2 termite. Usually it's just Section 1. They may have called you, they may have gotten you on the Section 2. Usually it's just Section 1 that has to be done per the guidelines, because that's always the big stuff. Section 2 is usually like treatable stuff, easy. Cool. Now, a couple of reasons why you should accept the VA offer. And I'm really big on having this in here because, we're all fighting the fight, right? We're all trying to get people into homes, and you have people putting 20, 30, 50, 100% down. And then you got this VA client who's putting 0. So one thing about VA loans, and I tell this to every listing agent when I call to represent my VA client, is they have a super high close rate. So veterans stick to their work and want to buy your house, right? They're not interested in just opening escrow. They're interested in closing escrow. So if you accept an offer from a Marine, Air Force, Army, any serviceman or woman, right? Like they're going to stick to that contract. They're going to honor it more often than not. It's very rare that you'll have a cancellation. 2, they have great turn times, right? So the old myth was, oh, VA loans take months to close. That is so far from the truth. So me and my company, we're what's called a VA SAR, a direct lender. And so we do all the VA paperwork ourselves. And then after closing, we send it out to the VA. So literally we closing VA deals in as little as 21 days. Another thing is the appraisal process. They are not harder to do. In fact, the VA appraisers are some really, really good ones. They're also required to get that appraisal back in that short amount of days, that's 7 business days. But they will not go MIA and they will not take longer, right? I know, like in the middle of the pandemic, there was times where you couldn't get an appraiser out to the house, you didn't know what to do. Like they stuck to their turn times. It didn't matter what was going on with the appraisal market. So they are really, really good. And now with rates being higher, those appraisals are coming back in less than 7 business days. So I think it was Giovanni who asked about a rush. Right now, we're not even worried about that on those. The closing costs, whoops. Closing costs, veterans can pay the closing costs. There's a fear of this non-allowables, right? Like it really is a myth, right? I've never had an issue where you get into an escrow and all of a sudden the seller has all these extra fees. Like it just doesn't exist. We don't charge an extra origination fee. We want to keep the cost low for the veteran. And so you shouldn't run into that issue where there's non-allowables and extra things that the veteran has to cover. And the other reason you should accept it is why shrink your buyer pool, right? If you got 3 or 4 offers or 10 or 15, you should not blow out the VA offer because they're not putting anything down, right? VA loans also have historically one of the lowest foreclosure rates in the country. So again, odds are if you accept that VA offer, it's going to close on time. It's going to close smooth. They're not going to back out, and you're going to have more opportunities, more people who want to buy the house. Beatrice asked, how does the VA make or base the appraisal? About the value of the comps, condition of the house, any ideas or considerations. So Beatrice asked, how does the VA come up with the appraised value, right? Like what do they do to come up with that value? So I haven't seen VA like pull different comps. I mean, I hear this all the time. Oh, VA appraiser is going to do this. Like they're using the same comp. If you're a listing agent or you're a buyer's agent and your client's offer is accepted, like give them the comps, right? Let them see like you would do on any conventional or FHA deal. Say, hey, here's how we came up with the property value. Here's the 18 other offers that we had. Here's why we offered what we did. Here's the home that just closed. Like I haven't seen any issues where the VA says, oh, we're not going to use this comp because it's too far or too close or whatever. I really, really haven't. Knock on wood, I haven't run into that issue. Christy, thank you for the shout out. I love you. The other thing I wanted to mention, and I'm going to come back here to appraisals. So one other thing on appraisals, and this is another really, really good one. Now that my wheels are turning and you guys are asking such great questions, I'm like, I need to add to the slide. So there's a thing called Tidewater. I'm going to type it in here. Tidewater. And Tidewater is something that's done by the appraiser when they think the value isn't going to come in. So Christie Appraisals does an appraisal and homes in contract for $800,000. She thinks it's not going to approve for $800,000. She's going to enact Tidewater. Basically gives the lender and the realtors 48 hours to provide the appraiser with comps to do a rebuttal or to say, hey, here's the comps that support that property. Typically, once the appraiser releases the report, there is no Tidewater and there is no coming back. There's no like, let me send a rebuttal. On VA, the rebuttal happens first. So you'll get that Tidewater notification. It'll say, hey, appraiser doesn't think the value is going to come in. You have to give them some comps or some information to support that value. You provide it over, and then they'll release the report and tell us what they think the value is. So Tidewater, extra word of the day, and I should make a slide on that because then you can share that too. That's really a good one. I hope that answered your question, Ms. Beatrice. Sorry, I digressed. I went back a little bit. VA offer, that was good. So documents required. So just to kind of give you, if you meet a client or you know somebody, and again, just kind of going through this, right? If there's anybody who you know who's renting, who's been in the service, like they need to buy. It's literally cheaper than renting, and they're doing themselves a disservice for not owning. But here's what you would need if you want to see if you're eligible. If you're not in the service, if you're not active duty, you need a certificate of eligibility. If you are out of the service, and we can pull, the lender can pull that certificate of eligibility, right? Directly, like if you call me up, I can go in and pull anybody. I can pull Beatrice's certificate of eligibility. This tells us that you're eligible for that VA. If we can't pull it automatically through the website, then the veteran needs to provide a DD-214 or a statement of service, right, or equivalent. So they can get that, they know what that is, but that would have to be provided so that we can get a certificate of eligibility. Also, if you have any service-related disability, we always want to see your VA awards letter. So how much are you getting each month from the VA? Those are the three most important pieces of the puzzle so that we can make sure you're eligible for that loan, right? That's super, super, super important. Oops. Oh, Beatrice asked me to report about Tidewater. So I'll say that again. It was Tidewater. I don't know if these are direct messages or they go to everybody, but I'm typing. So if you could see all my responses, let me know. Tidewater, Beatrice. So Tidewater is where if the appraiser is preparing the report and they don't think it's going to come in at value, they will initiate Tidewater, and that lets everybody know. That the home is that it's not going to appraise. That appraiser's having trouble coming in at value, and that gives you 48 hours to provide the appraiser with comps that support your value. Once the appraisal is released, you can't rebut the appraisal. So that's called Tidewater. If you get an email from a lender about Tidewater, thumbs down. We don't want to see that, because that means you got to come up with some comps. Augustine asked about CalVet, and I think you asked about it earlier, so I appreciate you asking again. So CalVet's a different program. It's a VA loan that's run through the CalVet Association. Really, the one difference between a regular VA loan and a CalVet loan is on the CalVet, the payment, CalVet covers the homeowner's insurance for the veteran. So the veteran, the homeowner's insurance is part of the payment, saves them a little bit of money on the insurance. Their guidelines are a little bit more restrictive, like you have to do a couple of more steps. I honestly haven't done a CalVet loan in years where I've run into it. A lot of times if you have older servicemen and women, they only remember CalVet, right? Like, oh, when I got my last loan, it was CalVet. That was 20 years ago. I really don't do a lot of CalVet. I haven't done one in a long time, but that is the main difference between a regular VA and a CalVet, is that homeowner's insurance piece. Here in Southern California, unless you're in a high fire area, it doesn't really make a huge swing. Where I used to see it a lot is in Florida, in Louisiana, places that had high insurance for flood. Or if you're close to the coast, I guess that would work too. But if you have high flood insurance, then the CalVet's not a bad option, because they're going to pay it for you. They're going to pay the insurance. I don't know how the insurance is now. Like, you want to make sure you have the right coverage, right? You don't want to just do that and find out you don't have enough coverage. But that's the main difference, Augustine, that I've seen. Yes, Beatrice, if you haven't gotten an email on it, on Tidewater, then you're okay. So usually once you get the report, it's done, right? Like, that's the value. But if you haven't gotten a Tidewater email, that's a good sign, right? You don't want to get a Tidewater email. And then a little bit about us, right? Obviously, we help answer all your VA loan questions. We'll help guide you through the process. We'll help guide you through the process, obtain your certificate of eligibility. We do everything direct. So we're not brokering anything out, or we're not waiting for the VA to respond, right? We do everything here in-house, which really helps the veteran and helps you, get your offers accepted. And so that's our own internal process. Additional questions. You guys have been super awesome. Hopefully I'm not yelling because I'm in the room by myself. Hopefully I'm not yelling too loud. But if you have more questions, I'm going to stay on here and answer. There is a survey. If you would be so kind, if you did the QR code, I think it should be a link to a survey if I did it right. My tech sometimes isn't great. But if you could do a survey, let me see if I can put it in the chat. Survey. I don't see it. Maybe it's not in there. I apologize if it's not. I know PWR wanted us to do surveys. Maybe it's if you scan this one. Sorry, guys. I'm not all that tech savvy, but I'll see if I can do it. Let me see, Joe. Yes. So if you scan that QR code, it will take you to the survey. We want to get that to PWR. We want them to know that we're doing valuable stuff for their members. We want them to keep Joe Soto around. We don't want them to get rid of me. Also in that survey, if you know anybody else who would benefit from a class like this, please let us know, right? Whether it's an agent, whether it's a client, we're always looking to grow and help more people. Make sure you follow me on social. I'll put my little link tree in there in the chat as well. Let's see. Oh, Cynthia, gracias. See? So let me see, Cynthia. Cynthia, I appreciate it. Apparently, I'm the branch manager. Manger. So I got a demotion to the branch manger, but by the next time I do this class, Cynthia, I will be branch manager. So I appreciate that. That is awesome. You know how many times I've used this slide, Cynthia? Thank you for caring. I appreciate you. Robert asked on the 21-day close, are those business days? No, Robert, those are calendar days. So we don't do business days and try to get you to pretend we can close it really quick. No, that's actual calendar days. You get in contract on the 1st, and we will close it by the 21st or 22nd if you don't count that day. Good questions in there. The social, did I put that link tree in there? And we do lots of classes like this, guys. Like I said, if you follow me on the social, or you'll get an email. We're always trying to do stuff. If you have ideas or you have challenges in your own business, let us know. Right? We're definitely here to help you grow your business. I think there's a lot of opportunity to service the veterans and the military community. And so if you can get out there and help somebody, it's a blessing. It really, 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 truly is. So I'm super grateful for you guys spending some time with me. We're going to finish right on time. And if you have more questions on VA at all, just reach out to me. I'd be more than happy to help answer them for you, whether it's just for you or for a client or for whatever. I know Giselle said she had, I know Beatrice said she has one in escrow. So if something comes up and you have more questions, Beatrice, you could always reach out to me. I'm always willing to help out. So there's a survey. There's the connecting. Make sure you click on my little icon so you can follow us. And I think that's all I got. Where's my screen share button? Stop share. Are you sure you want to stop recording?